All right, we're going to pick up where we left off, and we're going to examine the liabilities and equity for a complicated farm balance sheet. Once again, this is part 2 of a video. This is table 2.1 from the textbook Financial Management in Agriculture by Peter Berry and Paul Ellinger, copyright 2012. So I'm citing my source so that you know that I didn't cook up this balance sheet on my own. I made a few little minor changes to it as I've adapted it for my own use, but it is their balance sheet. In this video, we're going to just look at the liabilities and the equity side of the equation. And make sure, if you haven't watched the first video, to roll back and catch that first video. I'll give you a link to that video so you can get to it quickly and easily. So to get us started, I want to point out that this is a comparative balance sheet, meaning that it shows the financial assets, liabilities, equity for 2 different years, or for the last day of 2 different years. And we're going to start off by looking at current liabilities. Current liabilities are liabilities that you're going to have to pay out immediately in the very near future. These are things that you have to pay out with cash at some time in the next accounting cycle. So let's kind of break through these things. So the first thing is accounts payable. This is a very common thing that most businesses will carry as a liability. This is where someone has purchased something and not paid for it when they purchased it. So it's not really a loan per se, but someone did basically lend you money because they let you buy something and not pay for it when you walked out the door with it. Very common thing if you're buying stuff from a cooperative. You might send your teenage child or a farmhand with the pickup truck over to the co-op to pick up some seed or some fertilizer or some materials or supplies. And of course, they don't have any money, and they'll just tell the people at the co-op to put it on your account. And so that's what they do. And then they send you a bill and they say you've got to pay that bill within 30 days or else there'll be a penalty. And usually there's increasing penalties at 30, 60, and 90 days. So you've got less than 90 days to cover all of these costs. In 2009, there were just over 9,000 of these, and there were less of them in 2010 for whatever reason. I have no idea. The next item is notes payable within 1 year. So these are things like operating loans and revolving lines of credit, where you've taken out a loan, you've gone to a bank or your farm credit or someone like that and asked for money to run the business. For non-farm businesses, it's very common for businesses to use this as a way of covering payroll. You might be in a cash flow pinch and you might have to pay your employees, so you're going to run down to the bank and take out an emergency loan in order to make sure you've got your employees covered, and you know next month you're going to land a big account and bring in some money, so you're going to pay it off when it comes in next month. Very common for farms to borrow a lot of money at the beginning of a crop year, or borrow a lot of money when they first purchase some livestock and feed, and then they'll pay that off when the crop matures and is harvested, and then they'll sell the crop and have the money to cover that note, or they'll sell the livestock and have the money to cover the note. The next item is the current portion of all term debt. This right here is basically those monthly payments you have to make on your long-term loans that you use to borrow the money you needed for the land to run your farm. And this is something that most consumers are really kind of understand because they have a car and they have a house and they've got a payment on these things. And so this right here is the amount of that loan that you've got to pay down during this current accounting cycle, right? It's a liability that must be paid very soon. The next item is accrued interest, right? So this is the interest portion on those loans that we just talked about under the current portion of all term debt. So this is interest you have to pay on your loans, on those long-term loans. Now let's talk about that word accrued for a second. There are 2 accounting standards that are commonly used. There's cash accounting and accrual accounting, not accrual accounting, accrual. Accrual accounting basically says that when the expense is incurred, I'm going to write it down in my books. Cash accounting says when I actually pay the expense, I'm going to write it down in my books. The accrual accounting basically says I'm going to watch my interest and I'm going to estimate how much interest I've got to pay this year. I'm going to go ahead and write that down in my book so I can get ready for it. Cash accounting says I'll pay it when it comes time, and that's when I'm going to write it down in the books. So we've got taxes that you have to pay and interest that you have to pay that all accrue. So here's some more accrued expenses. Income and Social Security taxes. These are self-employment taxes that any business owner has to pay on themselves when they pay taxes. Most individuals who work for somebody The people they work for take care of all these taxes and take care of the withdrawal, and all you've got to do is file a tax return at the end of the year. Taxes are much more complicated when you run your own business. Accrued rents, and so if you're having to pay rent to somebody, there's a line for it in the balance sheet. Other items, and off we go. Current portion of deferred taxes. So these are taxes that you have to pay that have been pushed off into the future. They've been deferred. And then we have other liabilities for the farm and personal liabilities. Again, we oftentimes intermingle the farm finance and the farm household finance. And that's our total current liabilities. We're going to use the auto sum to figure out how to add those up. We just hit the auto sum button. And of course, Excel guessed wrong when it guessed what we wanted to add. So we're just going to drag that a little bit. Watch what I'm doing. I'm getting in the corner right here. I'm getting this kind of diagonal arrow, and I'm using it to drag up and down. I just click on the mouse and hold and drag. Hit enter. We'll copy and paste that formula over. And we've got our total current liabilities for both years. Notice that our current liabilities have decreased, which is probably a good thing. Now we have our long-term liabilities. It's really more of the kind of same story. We're going to break things down into non-real estate farm debt and farm real estate debt. We're going to break it down into an intermediate debt that is less than 10 years, and we're going to do a long-term debt that's more than 10 years. So this less than 10 years might be the debt on your pickup truck. The more than 10 years is probably going to be the debt on something like a building that you may have built. Likewise with real estate, they don't have any real estate that's less than 10 years of maturity time. It's all greater than 10 years. So these are things like the mortgages you took out on the home and the money you borrowed in order to buy the farmland. There's a non-current portion of deferred taxes, and then non-current liabilities, both farm and personal. We're going to take these liabilities and we're just going to sum them up using the auto sum. Click on the auto sum, the sigma, and again, it guessed wrong, so watch what I do with the mouse. I'm going to get the mouse right to the corner. I'm going to click, I'm going to hold, I'm going to drag up, and then I'm going to release and hit enter, and I'm done. Let's copy and paste that formula. Control C to copy, Control V to paste. And that gives me my total non-current liabilities. Now I need my total liabilities, so I'm going to type an equal sign, and then I'm going to click on the $300,000 in the total non-current liabilities, a plus sign, drag up and click on the 2012 number for the total current liabilities, hit enter, and I've got my total liabilities. Control C to copy, Control V to paste, and now I have the total liabilities for both years. Now I'm going to add up the owner equity, doing the exact same thing with the auto sum function, and it guessed correctly, so I just press enter and off I go, and I'm going to copy and paste that formula. Now I need to add up the liabilities and the owner's equity. So I type an equal sign, click on the equity, type a plus sign, click on the liability, and hit enter. And I should get the same number that I got in the previous video when I totaled up my total assets. 1 million and some change. 1 million and some change. So my balance sheet balanced for 2009. Going to do the same thing for 2010. Going to copy and paste, Control C, and then Control V, and I am done. And there we go. I've now gone over the assets, the liabilities, and the equity for this big complex family farm. Thank you all so much for watching. Hope you're finding this information useful. I'd love it if you'd go ahead and subscribe to the channel so that you can catch updates. Now I know that some of you are watching this video because you need to for a class or something in school and you've found the video to get information. I want to also encourage you to subscribe to the channel because you might need this information one day in the future. You might wake up and need to put something like this together and you might have forgotten how, and it'll be really nice if you can just go back to the YouTube video and look at it again and kind of refresh your memory. All right, y'all, we'll catch you on the next video.